Welcome to NRI Tax Show powered by IndianCPA.com. One of the questions which is most frequently asked is, do I have to include my Indian real estate on my US tax return? And the answer to that is yes and no. So in this session we are going to discuss on when it's going to be yes and when it's going to be no. So let's get started. Do I have to report my Indian property on US tax return? Here's a quick disclaimer. I would like you to pause the video for a moment and go through the disclaimer before we get started. And for those of you who are listening to me over the podcast, go to our website and take a look at this disclaimer, please. The agenda for today is, after a quick introduction, we are going to dive into the Indian real estate. We are going to talk about the existing property, the rental property, sale of property, inherited or gifted property, and estate planning surrounding the real estate. If you are an US tax resident, you need to report your worldwide income, which includes interest, dividend, capital gains, rental income, and all other income as such. Now, the reporting requirement is based on your tax residency. So if you're a tax resident, you need to report for all these income, and if you're non-resident, you report only the source of income which is derived in US. So the residency, as I said, is based on, you could be a resident based on your citizenship, you could be a resident based on holding a green card here, or it could be based on a substantial presence test. And the substantial presence test considers your number of days you stayed in this country. FBAR and H938 reporting, we have a separate webcast which you could go over for the H938 and FBAR relating compliance issues. The common question, however, asked though is, should I report the real estate outside US on my FBAR or H938 forms? And the answer to that is no. The reason being, FBAR and H938 forms accommodate just the financial assets and not your real estate. So talking about the existing properties, on an ongoing basis, just because you have acquired a property in the past, or you have acquired a property in the last year, do you have to report that on your US tax return? And the answer is no. As long as the property is not generating any income, you do not have to report that on your US tax return. Rental property, yes, you need to report your rental income and expenses on your US tax return, and any taxes paid outside US, you would be able to get a tax credit for that when you file your tax return here. But yeah, this is an S situation where you need to include your Indian real estate on the US tax return. Sale of property. Upon sale of property, the capital gains derived from such sale have to be reported on your US tax return. And if you have paid any taxes outside US, you would be able to get a tax credit for that. Now, sometimes you might end up not paying any taxes or any capital gain taxes outside US, and in that instance you might lose out on the equation. You might end up paying taxes here and not get any tax credit as such. So watch out for that situation. Inherited or gifted property. So it does not get into your tax return as such, but you need to report the basis at which the property was inherited. And this is important because if you would like to sell this property into the future, and the basis which carries over when you inherited the property has to be reported so that you could benefit from that. So what I mean by that is, let's say you inherited a property which is $1 million, and later you sold it for $2 million. Now you end up showing the capital gains. The difference between $2 million and $1 million is $1 million. And the basis reporting on the inheritance becomes very important so that you could get away showing the basis of the purchaser who had originally acquired. So what I mean to say is, let's say the original person had acquired it for, let's say, $200,000, and later you sold it for $2 million. Now if the basis was not correctly reported, you may end up paying the capital gains between the difference between the $200,000 and the $2 million, which is $1.8 million. So this is a very tricky situation. So if you need any assistance with that, do get in touch with us and we should be able to help you out. And as far as gifted property is concerned, the basis does not tag over, but however it is a reportable transaction. It's not a taxable event as such, but it needs some kind of reporting. Estate planning. So if you own substantial amount of properties, for the estate tax purposes, the property includes all that you own, whether it's here in the US or in India. So it's important to have some estate planning in place so that when it's time for the properties to pass over to your heirs, there is minimal estate taxes involved. So estate taxes are quite high. With a little bit of planning on estate, you would be able to save big, really, depending on how it is structured. So that's a very important transaction as well. Thank you, and I hope you liked our presentation, and I appreciate if you could go to facebook.com/NRI tax and like us there, or go to twitter.com/NRI tax and follow us there.